Okay, thank you. Welcome to the October meeting of the Audit, Budget, and Finance Committee of the Buffalo Fiscal Stability Authority. Thank you for being here today. Our agenda includes 3 items: a review of the audited financial statements as presented by our auditors, a review of our 2023 annual report as prepared by staff, and our last item, a 1-year contract extension with BFSA's Financial Advisors, PFM. First, I will call the roll. Chair Olson is excused. Vice Chair Jurczak?
Present.
Secretary Floss is present. We have a quorum. Okay. The first item of business is to approve the minutes that were of the meeting that was held on June 21st, 2023. The draft minutes and the accompanying draft resolution are located under tab 2 in your board book. Is there a motion to approve the minutes? Jeanette?
As moved.
Okay, second. All those in favor say aye.
Aye.
The minutes are approved. The next order of business is the receipt of the results of the independent audit for the fiscal year ended June 30th, 2023, and to recommend the acceptance and approval of the financial statements to the full board. The draft financial statements and related reports have been provided to you under tab 2. Minor edits were subsequently made to the management discussion and analysis portion of the report, with a final report distributed by email. Elizabeth Krause from Ludsman and McCormick is here to present the audit findings. Ms. Krause, welcome. Thank you for being here. We appreciate all your hard work.
Thank you, and good afternoon, everybody. Sarah apologizes for not being able to be here, but I will hopefully be able to give you all you need and answer any questions you may have. I will get started on slide 1 of the presentation. This is just a list of the deliverables and the work that we performed during the course of the audit. So you have an unmodified opinion for the auditor's report on the financial statements as they stand as a whole. That is for the net position of the entity, as well as the fund basis of accounting that are pertaining to the results in the financial statements. We also issue a report on the requirements for government auditing standards. There was no issues noted in this report as well regarding the compliance and the internal control review that we do for government auditing standards. And lastly, for the financial statements themselves, we do issue a report on compliance with section 2925(3)(f) of New York State Public Authorities Law as it pertains to your investment guidelines, and there were no matters noted there. And if there were, we would list out any of the findings that we came across, but there was none for the current year. We also issue a letter to the board, which is the communication with those charged with governance. And then we have a management letter as well that I will get to in the next slide. So here on the required communications, we're required to disclose what the auditor's responsibility is, which is to provide a modified or unmodified opinion on the financial statements to assess the risk of material misstatement within the financial statements. Again, we had no matters that were noted. There was an unmodified opinion. We performed the audit as planned and within the timing that was discussed, so there was no issues with delays or what have you. We had no issues with compliance as it pertains to our independence in regards to Buffalo Fiscal Stability Authority. Within the risk assessment and the audit procedures that we perform, we're required to disclose significant accounting policies, estimates, and disclosures. So within our estimates that we look at, those are pertaining to areas where there's more access to management bias, or there's more estimates involved, and that really pertains to the sales tax receivable that is being recorded on the financial statements, as well as the accruals for your employment retirement system, as well as your other post-employment benefits, and then those related disclosures. So it's those the May and June sales tax receipts that are coming in post year end. It is the the accrual of the net position of those plans for retirement and for OPEB, and then also the premiums on the bond receivables and bond payables that you have on your books. So then as it pertains to the significant disclosures within your financial statements, we highlight those. So note 4 is the amounts due from other governments, your long-term liabilities, the disclosures related to your pension plan, that's your ERS pension plan, and then note 7 is the OPEB requirements. The rest of the list here is really just some more disclosures that we were required to identify. So we did have no difficulties encountered during the audit. There were no disagreements with management. We had one small adjustment for ERS to get the accrual to the correct amount this year, and that was adjusted. There was no circumstances that affected the former content of the auditor's report. Management's consultations with other accountants, we did not have any in the current year. There were no other significant matters, findings, or issues. And then in order to finalize the reports, we received representation from management, just disclosing that they have given us everything that we asked for, that they agree with everything that is within the report, and that there's nothing that they did not supply us. Within the management letter, we had no material weaknesses and no recommendations pertaining to internal controls or other related items, but we do have 2 informational points in the management letter this year. One is for GASB 100, which is accounting changes and error corrections that is slated for next year for implementation. And this really is not going to affect significant form or substance of the financial statements. It's really just more of a financial and accounting and disclosure requirement that might enhance some of the disclosures you already currently have. And then within GASB 101, this is for compensated absences, and this is 2 years down the pike. And this really, again, not necessarily a significant change to the financial statements or a significant impact, but it really just clarifies the calculation components with compensated absences to make sure that things are streamlined across municipalities and that people are considering the right information when they do form the calculation. On your statement of net position here, you will see you have a comparative for June 30th of 2023 as it compares to June 30th of 2022. You have total assets of $21,592,000. This is composed of your cash and cash equivalents, your notes receivable from the city of Buffalo, amounts that are due from other governments, which are your May and June sales tax amounts, and then other within your notes receivable from the city of Buffalo. This really is just as of June 30th, 2023, the 2005 A mirror bond. The 2007 A mirror bond was paid off during the year, so that's why you see that significant decrease from the prior year. And then within other, you did have a net pension asset in 2022 that turned into a liability in 2023, so that's why you do see that decrease from 2022. In deferred outflows and inflows of resources, that is pertaining to your net pension asset again, or sorry, your net pension position with ERS, deferred inflows and outflows as it pertains to just investment valuation and actuarial evaluations of the plan. Within liabilities, you have your amounts due to the city of Buffalo. So again, that's that May and June sales tax, less set asides for debt service and admin costs. We have your bonds payable of $2,830,000, and that is about $2 million paid down from the prior year in principal payments, and about another $209,000 of premium amortization that was recognized to reduce your bonds payable from the previous year. And then you have other items here, which is OPEB, your other post-employment benefits liability of about $1 million. And then that ERS liability that was an asset in the prior year is now a liability of $375,000. So this year it's about 91% funded, and then it was about 104% funded last year, which was what made it an asset in 2022. By default, you have a net deficit position of $577,000. That's broken up between your restricted and unrestricted portions. Within your restricted net position, that really is what houses your cash and investments for debt service, less any interest payables. On the next slide, we have your statement of activities. In the top section here, we have your general revenues. which are your sales tax, and that's the continued increases that we're seeing year over year as the sales tax increases. So that sits as of June 30th of 23 at $172 million. We have your state aid, which includes AIM of $161 million, back to normal within state budget amounts. Again, we saw some fluctuations in the prior years with COVID related, but you're really streamlining that in the past 2 years. And then that leaves your interest and other income really just decreasing due to reduction in outstanding mirror bonds. So overall total general revenues are at $333,929,000 as of June 30th, 2023. Within expense Buffalo, those are those sales tax and AIM payments of $273,900,000. We have your distributions to the City of Buffalo School District, that's sales tax only of $59,860,000. We have your general and administrative expenses of $795,000. Here you're going to see some fluctuations year to year with the activity from your OPEB and pension plans. Last year you had OPEB income of about $264,000 that was lumped in and net with this general and administrative line. You also had pension income of $70,000 in 2022. In the current year, you have relatively minimal, if any, pension income, or sorry, OPEB income. And then you have pension expense of $66,000 that did bring up that general administrative line from the prior year. And then you have your interest expense. It's at a deficit this year just based on, again, the premium amortization and just in excess of the interest expense itself. So it's bringing it to technically a net revenue of $93,000, bringing your overall total expenses to $334,462,000. Overall, your change in net position is a deficit of $533,000. But again, that deficit is really pertaining to topside entries with your other post-employment benefit transactions and how they reflect on your statement of net position, as well as your pension activity that's really driving that deficit in the current year. And I think that is all I have. Do you have any questions for me?
Got to unmute. How has there been any impact because of any of the federal monies from the pandemic coming in? Has it had any impact on financial statements at all?
We're really seeing the impact of the COVID related monies more so in 20 and 21 with the state aid, but that really has again kind of flatlined, and you're more back to the budgeted amounts that the state has been putting out and what you've been physically receiving. So in the past year, 2 years, there really hasn't been any significant impact from COVID.
Okay, thank you. Jeanette, do you have any questions?
None.
Okay.
All was clear.
Thank you. Oh, there you are. You're in the middle of my screen, Elizabeth. So thank you very much. Is there a motion to forward the audit and its findings to the full board with a recommendation to approve? Jeanette, second. All those in favor?
Aye.
Aye. It's approved. We'll move it to the board. The next item includes the review of the annual report and a recommendation for the full board to approve this item in substantially its final form, as well as to delegate authority to the chair and the interim vice chair, the executive director and the comptroller to make any necessary changes that may be required for its accurate completion. The draft annual report has been provided to you for your review under tab 2. Executive Director Rowe, will you take us through this?
Yes, thank you. One comment I have that I was thinking as you were reading those comments were, we did a pretty thorough review of this annual report, so I don't anticipate any further changes to what you were provided by Nikita this morning, which were just a couple clarification ones. So this annual report is quite a project. I want to thank Bryce Link for all his work that went into it. It's a very comprehensive document. It provides an overall encompassing summary of what the board of directors of this authority accomplished during 2023's fiscal year. There's a little bit of discussion in terms of benchmarks for the city and for the covered organization, since this organization was created in 2003. But overall, really the focus is, what did the authority do during this last year? So just to highlight a couple things for you, the report is completed pursuant to Section 2800 of Public Authorities Law. It is required to be filed with New York State Comptroller's Office. It will be accompanied by the audited financial statements that were just discussed with us by Liz, and thank you for that, Liz. That was a good presentation. In addition to filing it with the New York State Comptroller's Office, there's several state officials that were required to file it with under Public Authorities Law, so they certainly will receive a copy of it. And then there's a group of, I'll call them other interested parties, that we send copies to, so they receive them, but they're not required to receive them. In addition to these distributions, we do post it on our website, and all of our annual reports are posted on our website. So the public or any interested party can access it easily. We produced 32 reports last year, which is a big number. Of this, 8 labor agreements were reviewed during fiscal 2023. We reviewed quarterlies for all the organizations, the financial plans, the financial plan modifications, the capital borrowing, the capital plan, the property tax exemptions. So it was a very active board meeting session during fiscal year 2023. In this annual report, there's a brief summary that Bryce provided on every single report and what recommendations were made by this board. So after every single meeting, I send a letter out to the organizations. I distribute our reports to them, along with a summary in our letter of what those recommendations are. So if they don't have the time or the desire to read through the report itself, I give them a snapshot of what that recommendation is. We talk about fiscal monitoring actions, other fiscal monitoring actions. We monitor workforce trends, overtime. There's a summary of the financing framework of the BFSA, as well as the city of Buffalo. We talked about that quite at length during the capital borrowing discussion. There is it's interesting, there's a cumulative financial impact summary of actions of the BFSA since 2003. We review and update this annually. Of course, not a lot, the vast majority of this was developed and created when we were in a control period. Now that we're in an advisory period and we clearly advise the city, any new savings are generated from actions that were taken while we were in a control period. So it's not just direct savings, but also a cumulative number of actions are included in this cumulative financial impact. And the direct amount from BFSA actions, the majority of which were savings from the wage freeze, is $316 million since 2003, savings to the city of Buffalo. So a substantial number and something to be proud of.
Do you look at our recommendations, and if the covered entity actually does our recommendation, do you count that as part of this, or is that completely separate? So we've done a lot of work on getting the covered agencies to change some of the things that they've done that have given them large numbers of savings. I'm just wondering if we can look at some of those things.
I think that is a fantastic idea. We do kind of report on that separately within our reports, but to put it into one comprehensive document is a fantastic idea. So I think Bryce and I'll talk after this meeting, and we'll start getting it in action for our next report.
And in that regard, as you said, since the authority's inception, 2003, around 360 million in savings to the covered entities. Is that statement or report, is that in a findable, conspicuous place? Do you know what I mean? There's clearly no link that says savings to covered entities. This is apropos to what you and Fred just that we all agree with. If that is our mandate to monitor, keep a lid on things, and save where we can, then should that be parked in an easily linkable, findable place?
That is also a great idea. I love that. We can be very visible with that on the front page of our website, which I think would be very good. And I'm also thinking that in the cover letter that I mail out to the distributing the report, maybe a highlight with a different color and a different font, just to highlight what that amount is as a suggestion.
Well, that's a good, there may be other routes. Yes, that's a good idea. But I could remember a visit you and Director Floss made to Common Council. And the conversation on that day told me that council members present really only had this in their brain. The control board controls, it fixated on the word control. What benefit do you bring other than control? Well, yeah, we do keep a lid on things. We watch things, but we also save money, piles of money. And that our publics don't understand that. My gosh, if that were, without the link being a big fat Valentine to us, if that were up front somewhere, so that people understand it's not just as the control board that controls no more, or is sleepy, or what's the bang for our buck. And I don't quite, this is about marketing and public relations for the fiscal authority.
But I think it's actually a little bit more than that, because I think that as policymakers are looking at how you deal with distressed cities, towns, and villages, we're the blueprint in how it works and what happens in a control period, what happens when we're in an advisory period, what can a control board do in an advisory period to make sure that people are saving money. It's almost a textbook for towns and villages and cities to be able to look at what we're doing, since we're really only one of 3 major control boards in the state.
Well, Fred, that is embroidered perfectly on what I said with marketing and public relations. Your point is we are a case study in how things can work in terms of material dollar effectiveness to the public served. We are a case study. Good point, Fred.
Anything else, Jeanette?
There's no other comments on my side. I'm certainly going to take the comments in the discussion that we just had and devise a plan moving forward.
Alrighty, so I'll accept a motion to accept the annual report as presented and to forward it to the full board for approval.
As moved.
Second, all those in favor?
Aye.
It's approved. The final item of business is to extend the contract of PFM Financial Advisors for a one-year period from October 1st, 2023 through September 30th, 2024. PFM has served as the financial advisor of BFSA since our organization issued debt on behalf of the city and retains the historical knowledge related to these complex transactions. PFM has agreed to maintain hourly rates consistent with last year. A copy of a letter confirming the terms and the accompanying draft resolution has been provided to you in tab 2 of your board book. Is there a motion to engage PFM?
As moved.
Second, all those in favor say aye.
Aye.
Opposed? No. Okay, that passes. We will do that as well. Is there any new business? Any discussion? Is there anyone in the audience that wishes or needs to ask a question? If not, this concludes the meeting of the Audit, Budget, and Finance Committee of the Buffalo Fiscal Stability Authority. Is there a motion to adjourn?
As moved.
So moved. We are adjourned.
Thank you, everyone.